3 of the biggest mistakes people are making when investing in stocks. If you're new to investing, this is your ultimate beginner's guide to investing. Mistake number 1, trying to time the market. How do people really do when they try to time the market? They end up buying high and then selling low when they panic. Emotional investing leads to stress and poor returns. You miss the brilliant days to invest because you're waiting for a better day. Hindsight is always 20/20. This is why consistent investing is key. This is called dollar cost averaging. You invest the same amount of money on a regular basis. The market goes up, you invest. The market goes down, you invest. You don't worry about what's happening because you're here for the long term. And you never miss the best days. This is all made easier when you have a new budget plan for each month that has your investing amount in it. Check out the first comment to get my free monthly budget checklist. Mistake number 2, picking individual stocks. Stock picking gives investing a bad rap because it makes it seem like gambling. If you only buy Apple stock, you're putting all your eggs in one basket, crossing your fingers and hoping it works out. It's like trying to predict the future. I don't know about you, but I've never been very good at that. 92% of the time, professional stock pickers who think about this all day cannot beat the S&P 500. And I don't have all day to think about this for an 8% chance that I can beat the S&P 500. This is exactly why I love indexed funds. I am buying a little bit of a lot of different things. If one of them doesn't work out, not a big deal. When you invest in the index fund, the S&P 500, you are buying a little slice of 500 different companies. When one of those companies stops performing, it gets kicked out of the index and something better is put in its place. All the work is done for you. Mistake number 3, forgetting about fees. How much can a 1% fee mean for your portfolio long term? It could mean $100,000 over the life of your account. If I don't absolutely need the help, I would like to keep that $100,000 for my retirement. Investing apps that are super easy to use are funded by your gains. They can seem fun and easy, but keep a wary eye on those fees. Try to look for expense ratios that are as close as possible to 0.1%. When you are seeing numbers that say 1%, run. If you're not exactly sure what steps you need to take at the end of each month to get set up for investing, check out the first comment to get your free copy of my monthly budget checklist.